All right, welcome everybody. Happy 4th of July. So even though it's a holiday, I thought it's important that we did a show today because there's so many incredible news that happened that we needed to report on. Of course, everybody's aware by now that Tesla had record production and delivery numbers. But beyond that, we also have more Berkshire Hathaway selling shares in BYD, record Giga Shanghai numbers as well. Three other good news and one not so potentially good news for Tesla. Let's get started. We've got Jeff Lutz joining us. You should follow him on Twitter at the Jeff Lutz. He, as you will see, has been very accurate with his predictions. He was previously a chief quality officer and senior vice president for supply chain in previous top 500 Fortune 500 global companies. So welcome, Jeff. I'm so appreciative
Good to
you're
be
here
with
with
you.
us. Let's get going. So we've got so many to cover. We don't have time to waste here. First of all, big reminder, this is July 4th. Teslas are the most American-made cars. This came out just cars.com. Finally, we've got somebody out there kind of like, they're just trying to hide the fact that Teslas are the most American-made cars here. Any comments on this, Jeff?
I mean, this is a decade of work by the Tesla team. They were kind of forced into this in the beginning as EVs were such low volume, excuse me, and Tesla was at such low volume. So, and they've been able to turn this and grow this into something that's extremely profitable. And they figured out what they make versus what they buy. And they have their source of supply very close to their factories. So, very meaningful metric.
Yeah, it's amazing. So people forget it that we have gigafactories in Texas and Fremont and more in North America probably. But okay, so obviously this is the big news. Came out this weekend. Tesla reported production deliveries, and you can see down here the total was 466,000 deliveries, 479, close to 480,000 production, and this obviously was way ahead of Wall Street expectations of 447,000. So this is about 20,000 more than what the analysts were expecting. The total Q2 production was also an all-time high at close to 480. Big news. Obviously, very happy that they beat. And this was the delivery estimates. Of course, we know that the investor relation consensus was 446. We've just said that. But this was the bulls, the Tesla Twitter community bulls. You can see that they range from 442 to 450. There's Jeff Lutz here at 457. So you were already pretty bullish. You were the closest, Jeff, to I think you and Brian from My Tesla Weekend, who reported the 480 production numbers. But in terms of delivery numbers, you were the closest. You're pretty bullish, more bullish than most. Tell me why you thought that way.
Well, Brian does a great job tracking production. He does a lot of due diligence. So congrats. Just my thoughts were, I've said this on a couple of different broadcasts, is that this has become very difficult to be able to, as the source of supply, the number of production nodes grows, the velocity of those nodes grow. So Berlin, Texas, even Fremont, Shanghai, as those grow, it's going to be more and more difficult to be able to track production output and velocity. And the other piece of that is going to be as delivery nodes grow. Now we see Malaysia is being announced as a new delivery node, so there'll be inventory for that, right? So Taiwan launched, Turkey launched, Thailand launched all over the last several months. So as these Tesla's not highly penetrated globally. They're just not. EVs aren't. So you're going to see this continue to grow. That's why this whole demand cliff narrative doesn't make sense if you've run a supply chain, or if you've been a part of kind of a larger industry in any role. You'll see kind of as you go from very, very small distribution to very expansive distribution, that takes a number of years to do, especially with new technology. So long story short, this is going to become more and more difficult to do. And I thought that they were going to surprise higher. When there was going to be a miss, I thought the miss would be to the low side because of this rapid expansion that's happening.
Yeah. And you also said this tweet, which I loved, right after Martin Viecha, who is the investor relations at Tesla's, announced their delivery. You said, hey, Tesla makes it look really easy. It's not. Thousands of suppliers, there's line workers. Tell me what cut-ins are, QA issues to coordinate. Yeah.
Yeah. So this is just, this is the grind of the 90-day 75 days of production or so, depending on where you are, every single quarter that these teams do. And it is thousands of suppliers. So Tesla's got a primary tier one supply base, and then those suppliers have suppliers, then those suppliers have suppliers, and they manage all the way down. I think, to they could be working on a 6 tier supply issue potentially if they have to get involved. So it's thousands of suppliers, all these different nodes, line workers. Cut-ins are basically event-driven changes that need to occur either for cost or supply, coming from the engineering team or coming from the supply chain team of like, hey, this part's better, this part costs less. This they have to do both things. They have to ramp production, but they also have to contain and drive their cost structure lower, and they've got to meet the quality standards and improve the quality standards every quarter. So they have to basically orchestrate this whole symphony and keep all of those metrics inside of an ever shrinking box. And that's, I mean, high praise on this team. They're ramping 10% increase in production quarter on quarter. That's significant when you grow in just one 90-day period. To grow your output 10% is significant. So a couple of Tesla execs like that post, and they all deserve it. Their whole teams deserve to be congratulated. They did a great job.
Yeah, no, I love that you I love that you actually have all their names. So that's fantastic. Tom Jew, Baglino, Lars Moravy. Who's this guy? Karn, but
Yeah,
I should show this here.
Karn's the VP of the electrical supply chain.
And then
Um,
Roshan.
and Roshan runs the mechanical of other pieces as well. But Karn and Roshan basically are getting components, and product into the factory, and Tom Zhu runs the gigafactories. Is kind of the way to think about the whole operation. And there's many other people around them, below them, that are driving it. And then Drew and Lars on the engineering side. I'm sure every single day and hour of that quarter, there could have been a yield issue in a supplier in the factory, or there could have been something technical that they needed engineering input to unlock supply, basically. So, or drive a cost reduction. So they all work together.
I
And
love
there's
it,
many
Jeff.
other
You're the
people.
only
Yeah.
I know of course you're gonna say that. You're the only person though of all the Tesla Twitter community that's actually caring and recognizing it's the supply chain people, it's the Gigafactory people. They're the ones that are putting all this work and it made it happen, and you call them out and you say, hey, you guys deserve thank you for doing that, Jeff. That's a good reminder for everybody that it's these people, and they're very effective. They're very competent people. Because of that, us Tesla stockholders are rewarded. And so we saw the stock jump. Obviously, when it reported Monday, yesterday was a short day, but it already jumped up to 280s. Yeah. And then they also then said that the Q2 earnings is going to be July 19th. So this is the
Pretty
one
quick.
that we're all going to be waiting, bated breath, because we know, right? We know that production numbers are very good at 480. But the delivery numbers, I think we're all very happy, 466. But we think that that's because of price cuts. And then I keep asking you this, and you keep saying, "Oh, it's going to show up in the third quarter, fourth quarter." I think it's going to show up this quarter. So on Q2, are we going to see margins? You still pretty conservative. You're still thinking anywhere between 15 to 18%. I'm going, it's got to
Yeah.
be at 20%. And you're saying, no, the lithium prices reduction, the price cuts was significant. Q1. And I know you said it kind of rolls into Q2. I got that. But I just feel like they might have got more margin or cost compressions by this point.
Yeah. There's a surprise coming for sure, and it could be this quarter. Um, and but I'm just trying to set expectations. They did a pretty sizable MSRP reduction in April, which was this quarter, this current quarter that they're going to report on, and then they've done just some inventory management and price reductions on existing inventory. So just trying to just keep expectations in check. A lot of moving parts here, but what I thought was what I saw that was pretty favorable in the last call it couple of days was when we saw the production numbers. So that means they pulled forward production probably slightly ahead of plan, and that always helps on cost. That helps, and the speed of your supply chain dictates a lot of your cost structure. You're able to pull components in faster. You're able to pull in price reductions
Mhm.
faster. You're able to
Yeah.
pull in new changes faster. So I still believe that that surprise will most likely be in the second half, but maybe it could be as early as this quarter. But I do believe that margin compression, we're at the trough of it, and that I call it a coiled spring. It's gonna load here pretty soon, and I think they're going to exceed expectations. I just don't know if it's going to be this quarter or next. But the point is that from a stock perspective or a company management, the point is they have I believe they have a path to just to go higher versus like this is it. This is terminal. They can't build EVs at any rate. They can. They're going to be able to do it on this generation of technology, and they're certainly going to be able to do it as they release newer generations of technology with Model 3 Highland and Cybertruck, and then what comes after.
Yeah, you're the one that's been telling me that the Gigafactory scalability is critical. Tesla needs to raise it as fast as possible because, like you said, supply chain vendor relationships, that's where they can and, take advantage of potential cost reductions if they can have full scale. So we're seeing production rising. Are you still expecting 4680 being the bottleneck and that it's going to hold them back from getting up to the 80% scale for Giga Texas and Berlin?
Well, the good news is it looks like Shanghai and potentially Fremont are pretty close to being, near full capacity. So very high utilization um, is a great for fixed asset costs, and it's also great for the suppliers that feed those factories. Now, in the case of Austin and Berlin, they're running somewhere between, call it 50 and 65% of their phase one production capacity, and they're growing. They're growing every quarter. They're growing that. So anytime you have that gap between your full plan capacity, and like I said, they haven't hired all the labor for full capacity. They haven't installed all the capex for full capacity, so they're not taking a dramatic hit, but they are taking. There's a drag on Berlin and Austin built units until they can, more fill that phase one capacity. And then the other drag is going to be the 4680 and the yields on that and the supply of that. And is that smooth supply or is it lumpy? You, when you have lumpy supply, that means you have starts and stops on your factory line. You don't have great utilization of your labor or capital, and that turns into a problem. So you want smooth ascending supply of 4680. You want those yield issues resolved because that'll bring the price down of the 4680s. And the cars that the 4680 are going into have all these design improvements to take their cog structure down further. So what's helped Tesla and is that there's offsetting cost reductions in the cars that the 4680s are going into. So while the 4680s may be an issue, maybe we don't know. We haven't gotten an update yet from the company. Maybe they've worked through it this quarter, but if they are still an issue, they've got offsetting cost reductions with all the simplifications and modifications they've done to the dual castings and so forth that these cars are going into. So yeah, it's long story short, we got to solve 4680 velocity, yield, cost for Austin. Got to fill up Austin. We have to fill up Berlin. When those are filled up, utilization's up, fixed costs are down, and then supplier utilization's up, supplier costs come down further, and that's the equation we need.
Okay, I don't want to belabor this, but the 480 production numbers pretty good, pretty good.
Yeah.
To me, that shows to me, a layman, that things are moving and moving faster. And I don't see the 4680 being, like you just said, a bottleneck per se. This is the second quarter. This is where we should have seen it. So I'm getting a little, I know, I got to temper myself, but I'm a little bit more, okay, I think we're headed to, I'll show one of your tweets, 500,000 quarters is coming, which is what we
Yeah.
needed to see for this year.
Yeah.
Okay. Okay. So this is nice numbers to show kind of putting everything in context. The vehicle deliveries for second quarter, this is a nice graph that shows this. So 4066 for the second quarter 2023. This was what it was in 2022, 2021, and 2020. And my understanding is that Q2 2020 was when there was the global COVID shutdown. And then Q2 2022 last year was the COVID shutdown in Shanghai specifically. So, you know, for me, it doesn't matter that these were depressed. What matters is we're back. We're back, and this is like, this is gonna. I'm looking forward to what's gonna be in the following years.
Yeah, and it's still it's 83% growth, and every other automakers had problems, excuses. Toyota's still talking about silicon. So that operation, that Tesla operation, grew 83% year on year. Whether they had to shut down, they had to deal with those issues, and then they had to ramp it all back up. They had to ramp their supply base up. They had to ramp their factories up, all the labor, all the capital, everything. So hats off to the team. That number, maybe that 255 last year, if they weren't dealing with COVID, maybe it would have been closer to 300. All right, it's still significant growth. So, and the bears are coming out. The bears are stating, well, yeah, at what cost? What kind of MSRP reductions does Tesla need to do to drive this growth? And the answer to that question is they are unraveling the cost increases that were born by COVID and the COVID surcharges. What happened to a container of freight? It was, $18,000 to $20,000 for a container of freight, and now it's $1,200. So all those things have been unraveled and have allowed Tesla to take their cost structure down, and also we are dealing with somewhat of an economic slowdown in pockets. You can't deny it. The rates to purchase an automobile are literally double what they were a year ago. So there's factors out there that can't be denied. But you put all that to the side, these numbers just stand on their own as being extremely strong, extremely solid. They're in a great spot with new models coming out in the second half.
Okay. When I look at this chart, I see an exponential curve. Look at this, a massive exponential curve, not even a little one. I mean, typically slow, right? Tiny little numbers. And then now we've got gigafactories galore. We got a new one being built next year. We're still not even the fact that we haven't even ramped up two of them fully. That means potential for this to go up. And for me, it doesn't matter if they have to cut prices. It's just sell what you can make, but the demand is there. So, yeah, this is a beautiful chart. This is what I want to see. Boom, I'm gonna go up higher. So Q2 delivering report is now, after that, if you add it together, Tesla has sold 4.5 million vehicles since the Model S in 2012. 4.5. And now it's going up every quarter by 500,000. Every quarter, it's going to be another 500,000. So that is from 4.5 to 5 million, 5.5, and even higher at that point. And you said in Q3, Tesla has a shot at delivering this 5 million car. So we're going to be at 5 million already by the end of this year or more. 500,000. So you're pretty well guaranteed we're going to be at 500,000 a quarter, right? I mean, not guaranteed, but I mean, at 480 production, we should be able to do 500,000 by the end of Q3.
Yeah.
Yeah.
And the key thing is going back to your comment on exponential growth. So we're going to build in one quarter the quarter we're in right now. We're going to build in one quarter what we built the entire year in 2020, what Tesla built in 2020. So that is the growth. This is why there's one of the reasons there's a multiple on this stock that's higher than some of its peers is exactly that statement, among others.
Yeah. All right, let's take a closer look at Giga Shanghai, Tesla China. And so they achieved a record of 93,680 vehicles in June. And this article is saying that it's the marketing, the efforts that Tesla was doing in China for marketing its vehicles more assertively to consumers appears to be paying off, which I agree. As per data recently released by the China Passenger Car Association, they sold the 93,000 Giga Shanghai made vehicles in June. This surpassed the previous record of 88,000 vehicles in March. So that's what about 5,000 more per month extra. And then this is from Roland, who creates the most amazing charts out there. Just to put things in perspective, the 93,000 for domestic sales and export June is at 21% increase month over month. Oh, what? How's that different from what I calculated earlier there? And the quarter shapes up at 247 with 8% quarter-of-quarter growth. Let's take a look at that chart a little bit closer. Yeah. So they said 229. Where did I? Last quarter. How did I figure surpass some previous market? Oh, this is by month. These guys are by month? Yeah, they're by month, and this is by quarter.
Yeah,
Oh,
no, it's great.
yeah.
It's great
Yeah,
growth.
this is total quarter.
Yeah, and it's a very competitive environment. NIO, Xpeng, obviously BYD, all are participating in the quote unquote price war with Tesla. So everybody's geared up for this. I think Tesla's in a much better position with newer models coming out, and they haven't even entered the tier below 30,000 yet that BYD is scooping up a bunch of those sales. And so if you just do it, the tiers that Tesla are in, that 30,000 and above, they're really crushing their competition. And they've, Tesla's got to accelerate getting, Model 3 Highland and getting Gen 3 out. And they'll continue to distinguish themselves, building this large base of customers who want to go from, their first Tesla to their second Tesla, or someone who's never had an EV before. So it's great growth. There's a lot of concern in China. I remember around the May holiday, just a lot of tweets going back and forth. I'm like, oh, they've shut down for 2 days. It's, China's going to be a disaster this quarter. And turns out that it's a very, very strong quarter. They've set themselves up again really well. And China is a factory where I believe that, talking about accelerating cost reductions and changes, I believe they're uniquely set up to do that, given the volume they do, with export and as internal to China.
Yeah, that's a good reminder that we should remind folks, and it shocks me, is that these numbers we're saying, Tesla China, is almost all of it Model Y and Model 3. But these are the expensive premium brands, Model Y at $60,000 US equivalent, and they're selling everything they're making and more. They're the number one selling car across all Chinese manufacturers beyond. Even if you look at the ICE cars versus EVs versus hybrids, if you're looking at even the cheaper cars at 20, 30,000 US dollars or even smaller, Model Y is still outselling them all. And so, like you're saying, that once they have a Model 3 Highland, maybe a separator, maybe there's the compact car in the future comes out, then, that's going to China's going to look really, really good. Yeah. This is Larry Goldberg's tweet, look, which is fantastic. He said, Giga Shanghai, their delivery rate right now, the run rate is 1.1 million. If you look at the month of June and you stretch it out, if every month from now on is the same month, 1.1 million, and a shade under 1 million per year if you look at the second quarter run rate. So we're already at 1 million per year, reaches 100% of targeted deliveries, and affirms its status as the highest production car factory in the world. Yeah, what was your comment on this?
Yeah, they've come a long way from a dirt field or swamp, and they're Tesla's continuing to invest in this location, continuing to grow it. They're going to grow motor inverter output. They're going to grow. They're put a megapack factory as well out there. So yeah, getting to this run rate is critical. It shows that they've got the supply base set up, they've got their operations set up, and they're stable and they're ready to kind of go to the next, that next leg. I think they're going to need again to expand in TAM. They're going to need to to drive below that 30,000 mark. I'm not saying they're capped here. I think there'll be continued growth, but to really kind of go truly up and to the right, they're going to have to continue to drive cost reductions and MSRP reductions, because it's a very competitive market from a pricing perspective, and and the way Chinese consumers are. They want to make sure they're really getting the best deal, and that deal holds, for a period of time. So, but it's great to see. Tesla Larry always has great posts. By the way, I would follow him, and we also had Ray earlier. Great content on Twitter. You're on mute.
Yeah, just repeating the point that this is with high premium prices that Tesla is still surprisingly doing incredibly well, probably going to maintain this, if not even growing it as we move forward. But they need to, once they add additional market segments, it's going to be crazy. So you like this tweet from Jason DeBolt. He said there's no stopping Tesla. If you've studied the economics and engineering of EVs, energy storage, and AI, it should be no surprise that Tesla will 10x from here simply by scaling up, just by scaling, without any more bet the company level innovations required. Copy and paste those factories, make incremental innovations just to get to 10x. They front loaded the crap out of R&D, made all the right investments, hiding much of the profit potential from all but the most attentive investors. Ride this thing up. It may not be smooth, but it's gonna go up. So, I like that tweet as well, because it just, that's what I was saying earlier. Like, you saw the ramp going up like this, and this is with 2 gigafactories not even scaled fully. And so they just need to scale it, keep producing those gigafactories. And, obviously, I think we all believe that the demand for electric vehicles is just at the beginning. I think we reported the number that right now, today, globally, 10% of all cars being sold is an electric vehicle. And in the US, I think Tesla is at, I think globally, I'm sorry, I think we're at 2 or 3% for Tesla sales at this point. So there's tremendous open field still. Why did you like this tweet so much?
Yeah, Jason's brilliant, and he's bringing up a really good point here. I really like the second half of it even more, which was the front end loading of R&D and investment that Tesla has done. If you think about it, if you rewind the clock back, to over a decade of work on motor design and manufacturing, inverter design and manufacturing, battery pack module design and co-manufacturing with Panasonic. Now they manufacture their own. And this took Tesla a decade with a very focused effort of like, all we're going to do is we're going to accelerate EV. And there's more than a decade of work. And then they took their decade of work and they up-revved it, and they were able to produce a car like the 3 and Y and take it down, basically cut the price of the car in half from the S and X. And now they're about to do that again. And for incumbent legacy auto manufacturers to try to come in at insert themselves without doing that prior decade of work is going to be very difficult. And also, this is Tesla R&D. This is their know-how, and everything is written into a patent. They've got their own know-how in their factories of how they build, how they test product, their own internal Tesla software that basically runs their entire operation, from engineering component design to car being distributed out of the factory, tested and distributed out of the factory. And all that takes time to do, all of it. And if you look at the structure of other companies that are doing this, they had highly distributed supply chains. They bought more than they made, a lot more than Tesla makes themselves. And therefore, they're paying a margin on that from everything they're buying from everyone else. Ford's buying a motor from someone else. They're going to pay those people a margin. They're not going to do it at cost. And they're not going to have the kind of scale that Tesla has. Builds more EVs than anyone else. So no other electric motor manufacturer is going to be able to build at a higher scale than Tesla right now and pass on savings to a Ford or GM. So that decade of work is meaningful. That investment is done. And I like that part of the tweet, because that's banked, that's done. And now they're living off of that investment. Of course, they're not just sitting back. They're continuing to innovate, and they're continuing to accelerate. The staff level of a Tesla, 10 years ago to what it is today is probably 10x. And what's it going to be 10 years from now? They don't necessarily have to grow exponentially in staffing, but in terms of innovation and doing new categories of product. So we can go on. This could be an entire show within itself, but I think the key takeaway is what Tesla's been able to do and front end load and invest, innovate, and now produce and have output produced from it is just way ahead of anybody else right now. And people are producing, models are coming out. There's new models, but they don't have, they won't have the powertrain performance. They won't have the battery performance. They won't have the cost structure. They won't have the gross margins needed, and therefore they won't scale. So until, there's I've always said they're at least a generation ahead, and that could be 5 to 7 years or more than the competition. I think the elements of that tweet sum that up nicely.
Well, that's what I was going to ask you right there. So you just said you've always been saying that they're a generation ahead, which is 5 to 7 years. But I had always assumed that that meant the car, the technology of the car. But if you add in the gigafactories, the supply chain, the battery research and development, and all these other things you just mentioned, where do you think you're landing now? If let's separate it out. There's BYD, compare that to them, and then let's talk about the rest of the manufacturers who seem to be just none of them seem to be even close. But what's your reaction?
Yeah, it goes back to like core metrics, like output per square meter. It goes, for factory efficiency. And, you know, Tesla treats their factories like a product. And so Fremont had some output per square meter, very poor actually in the beginning, and they've continued to improve that over time. But that factory, that's a former ICE factory that was not built from the ground up, purpose built for how Tesla wants material to flow into the factory, the velocity through the factory, the output per square meter in the factory, and then the output to the other side. And now the factories they're doing are all purpose built, and yeah, it's a big deal. I haven't necessarily. I've watched the competition very closely. It's not clear to me. We don't get these metrics reported externally. By the way, Tesla's pretty open, especially in Investor Day, with where they're driving velocity and output per square meter. It'd be interesting to see some of these other car factories. But if they're traditional kind of serial operation factories, they're not going to be as efficient as what Tesla is doing. So while a lot of the other competition kind of ran, to Mexico and ran here or there to set up operations to reduce labor, Tesla, built another factory, a mega factory in the U.S. and they're gonna set up an operation in Mexico as well, potentially. We'll talk about that in a bit, but Tesla approached it from a path of innovation and an approach from like, how do I do this better? How do I do this so meaningfully better? It doesn't even matter where the source of supply is. From a network latency perspective, like supply chain 101, you want your source of supply to be as close to your customer base as possible. And you want the ability to that repair loop to be as close as possible as well. So they've continued that, like um, that higher order bit is basically how they're setting up their operations. And then under that, they're basically massively improving the efficiency of the factory. And I'll be very interested to see with the unbox process what they're able to get to in terms of output per square meter. Is that phase one in Austin really 500,000 cars per year, or does that go to 800,000 per year when they reconfigure it, or does it go to 1 million? So when we say they're ahead in product, they're ahead in R&D innovation. They're also ahead of in factory design and really the underlying supply chain below that, where they either set up the right supply chain with partners or they build it themselves.
Okay, let's go back to the conversation. So this is like, obviously sets us up for continued growth in the future, separation from the competitors. Let's go back to the current stock price. So we saw it pop up to 280. We're going to get the earnings call in 15 days. We're going to hear the earnings call at that point. What do you think is going to happen to the stock price? If you had to guess, is it going to, we saw a bunch of analysts raising the price targets. It's hilarious. Those three who lowered it last week now has to raise it this week. That was just a complete ridiculous move on their part. But we're going to see price increase in analyst estimates. Is it going to be kind of like, what do you think the mood is before the earnings call, and what will happen to the price?
Yeah, none of this is financial advice from either of us. It's hard to predict short-term action on stock. We'll just sit
Yeah.
here and look like, fools 2 weeks later, but, I think there's continued momentum. I mean, there's technicals are meeting fundamentals. There's gaps to fill up at, I
Okay.
think, 284 to
Technicals are
289.
yeah. Technicals are meeting fundamentals. Go ahead. That's a good term. Go ahead. Tell me what that means.
Yeah. So technically, right, you're looking at the price action, and I haven't looked at the most recent technicals, but I knew there was some resistance, I think, in the 284 to 289 range. And then you've got these fundamentals of great
Yeah.
deliveries occurring. And then you've got, this is the quarter that CyberTruck's going to be built. I think Alexander reminded us via tweet just, a day ago on that. So you have technicals meeting fundamentals. And, after 289, I mean, obviously there probably some resistance near 300, but yeah, I mean, there's definitely room for it. I mean, we talked about this the last couple of months. By the way, since we've been doing your show, I would say 90% of the time we've been doing your show, the stock has been going down, and we've been explaining like why it's going down. And now for the
Yes.
last couple of months, we have the opportunity to explain, why it may go up. And remember, Tesla is only, it's an $800 billion company. It was at 1.2 trillion before. Some could say like it didn't belong at 1.2 trillion. Fine, a lot
Mhm.
of things may have not belonged where they were, but the point is it's nowhere near its 52-week, or sorry, it's nowhere near its all-time high. And there could be a lot more room, for it to go. And again, the fundamentals are actually catching up with it now.
Yeah.
And we're starting to see, if you start, I mean, let's talk about earnings. I mean, there's a number of surprises like we talked about with COGS reduction. We could get a surprise there. I don't think we're going to get, I think consensus with reg credits was still up at 19%. I was surprised. I want to double check that number. That would basically be flat with Q1. So we could get a surprise there. What about energy? What about stationary energy? What's going on there? We have no idea. We just see the drone shots of that Lathrop factory, and the parking lot's getting bigger in terms of how many units are staged, and they're just every couple of hours they're going out on flatbed trucks. So we have no idea what stationary energy. And then what else could they guide for for the next quarter? They've taken. What about the Model 3 Highland? I mean, there's so many catalysts that are coming up. Um, so it should make for a pretty surprising, I say, it's a pretty exciting earnings setup. There's just a lot of we don't. This is pretty unpredictable to me. I mean, again, we can go through the mechanics of 40 production, 466 delivery, this many SX, this many 3, come up with an EPS number. I think everybody can get pretty close on that. But it's these surprises. It's this energy storage. I think, like I said, there definitely set up for a surprise on production delivery. We got it. We're going to probably get more in the future. I also think we're going to start getting more surprises on the earnings side because of the momentum upwards. Again, energy storage and what they're doing in COGS reduction. So we'll see. I'm bullish,
We'll see.
obviously,
Yeah.
but I also had a pretty low estimate on auto gross margin, 15 to 18%, because I do believe this will be a trough quarter, but we could get a surprise too.
Okay, that's funny. So I'm more bullish than you, as we know, in terms of
Hmm.
earnings. I'm thinking auto gross margin will be at 20%. I just can't see it going lower than 18%. It was at 18, 19%. And I think that they're going to see, I don't think that there was enough price cuts to warrant this, and it probably recovered. I don't expect the energy as you are. That's not gonna be a surprise at Q2. It will be in Q3 and Q4 because we already heard them announce that they're gonna start reporting on it Q3, Q4. I think it
Yeah,
does take these after agreements, it takes months for them to actually get the cash or get the actual,
makes
showing up the
sense.
books. So I'm a little bit more pushback, but yeah, Q3, Q4, obviously things are looking great. What a great year for us. We, like you said, you just listed out a bunch of things happening. We'll be talking about them, but Q2, I think what matters is the AGM. That's it. Auto gross margin. If that is hit at 20%, um, and then basically it's like, okay, that's it. Price cuts, a huge impact to us, but maybe not because the gross margins. That's what, like you said, you call it a trough margin, which is like people pretty agreed that the price cuts were so severe that this is probably the lowest out of gross margin that they'll experience for a long period of time. And in fact, with the scaling of the factories, it'll just improve from here. So that's why it's looking really good. And the funny thing is, not funny, but it's like silly. But many of these analysts, they go and project out, but they don't build in the potential growth and the gross margin. They take what it is now and they go, "Well, it's going to stay like this for the next several years," and it's not the case. So okay, let's move on to BYD. So we know that everybody keeps saying BYD is the number one competitor to Tesla. Certainly their numbers look like they are. We also know that their profit margin, though, is very low. Here is news that the BYD CEO, Wang Chuanfu, says his company has a huge headcount, 660,000 employees. Tesla has 120,000 employees. So, yes, their numbers are equivalent, but now I think BYD is obviously a bigger company. They also sell other things other than cars, but that's this huge difference. This isn't just a little bit higher than 120. This is what, four times higher, uh, five times higher. Can't do my math. Longs for full production automation because they don't have production automation like Tesla built theirs at all BYD plants, and to reduce the headcount for cost savings. This is an unsolvable problem. Unmanned autonomous driving is, oh, that's the other thing, because BYD has come out saying that they don't believe that self-driving is even viable. So, yes, they're currently, in terms of an electric vehicle, they're a competitor, but they have no work on autonomous driving. And he said this already, tens of thousands of times more difficult than factory automation. He's literally said it's BS. Yeah. So here's the CEO of this supposed competitor to Tesla, and they don't even have any work at all. And so he's going to call it BS because he has no efforts working on autonomous driving at all. So,
Yeah. So, Mr. Wang is a technologist. He's a chemical engineer, very smart individual. And I've been to their factories, many of their factories in China, again, under a different mode, but I've also had the opportunity to see the early auto operations as well. And their mode of production, just where labor rates have been forever in China, right? But they've been ever increasing over the last decade. Was basically manual labor, and really, when you did the cost benefit analysis of going to automation, it never added up. But you'd also have to think, the mix of what they were building. There's like, what's that return on that automation investment? But when you actually go to auto, I haven't seen any of their data on this. I'm more talking about other components and other things that they build. But I'd have to think, when you go to auto and you're building models for 4 to 6 years or longer, that return would be better. But basically what he's saying is he's got a massive deficit in having too much man labor for these operations. And guess what's happening in China and what's happening elsewhere is labor rates are growing. And it's going to continue. I think what he's signaling here is he's got a cost problem. And so I thought that's why it was really important to share that tweet, because I think he's indicating he's got a big cost problem. He needs a huge transformation in his factory. How many years did Tesla toil with over automating? Not first off under automation, then over automating with the Model 3 line, and to find that right equilibrium point. That's not trivial. All the automation work that Tesla's done, all the acquisitions they've done of automation vendors and fixture vendors and so forth. So Tesla's really set themselves up. BYD's telling you they have a lot more work to do. And then on the self-driving piece of it, I mean, if you're a customer of an automobile and you care about autonomy, you care about safety, you care about, does my car get better over time? Does it have the ability to eventually drive itself? And when Tesla actually turns on an FSD beta program in China, I think you're people looking at the value equation of a Tesla and the value equation of a BYD much more differently. Right now, they may have an edge on hardware cost that's allowing them to ship more product. And by the way, when they ship product, that their numbers are shipped into dealerships. It's not all direct to consumer. People should be, very clear on that. So, anyway, two really important takeaways from that tweet on autonomy. Kind of a, he's kind of saying it's a dead end for them at this point, and then just on the fact that I think they've got a cost problem, and then they need to drive massive automation, in their
Yeah.
factories.
I think I always love it when you see businesses and something that was a positive strategic advantage turns later into a disadvantage. In this case, the cheap, plentiful
100%.
employee staffing. So then why would you automate if you've got, hire people? And then Tesla's going, I want to be an American made company. It's going to be expensive. I better go full automation now. And then today you can see the concerns, the issues, because like you said, the society's raising their prices and so forth. So, okay. So that, this is warnings potentially happen in the future. I just wanted to play this a little bit. This is Wang, the CEO of BYD, just so people can see him. He's speaking in Chinese, so I won't play it long. We're just going to just take a look at what he's like.
66万员工，这需要的是我们产线无人化，能不能用机器来干，不用
Okay, that's enough. So that's him. You said that you know him, right? You've worked with him in the past.
Yep, absolutely. Yeah, we number of years launched a couple of product lines in the mobile phone world. I met him, I think, in 2002, 2003 in that area, and we worked together, for a decade after that, and done a lot of work with BYD and the team. I also know a lot of his senior staff at that time moved over to run the auto business. Stella Lee, they had some pretty talented, hardworking people there. And Mr. Wang, again, is very, very strong, very resolute. Did not speak much English as well back then when I worked with him. So, but yeah, really, they are a talented group. They're a determined group. They have scale. But he is basically pointing out that they've got. I believe he's pointing out he's got a cost issue to deal with.
Yeah. All right, let's move on. So we've got more news about BYD. So Berkshire Hathaway, they sold 86 million shares. And it says here that they did this on June 19th, which is a couple weeks ago. And their shares now, instead of it being 9.21%, they're now at 8.98%.
Yeah, they've been
So
trimming for the last over the last year and a half. They still have a sizable stake, but yeah, they've definitely been been trimming along the way. BYD reported good numbers. Their stock was up, so still a very strong company. Strong growth ahead. I think they're going to struggle though this with global scale. I think do they have a software platform that really scales? So when they go into other parts of Europe or in other geographies that they people can turn that car on. It's localized for them, and it's got it's got experiences that kind of make sense for the local geography. Whereas Tesla, I believe they have a global software platform that they've localized very effectively for China, for Asia, for Europe, and abroad. So I think localization of software is actually going to be a challenge for them. What's the app ecosystem? What are the partnerships? So that'll be interesting to see, but I think that's where they'll struggle.
Yeah, we can't read too much into this, but there's obviously some warning signs there, right? You've got the trimming of the shares by Berkshire Hathaway. I mean, yeah, you can't read too much into it, but if they were supposedly the second, massive growth, wouldn't you be adding more? But we'll see what happens there. Okay, so there's also some negative news coming with Tesla. We should report. So it says here this is I think more than a rumor. I think I would believe this, but basically this article saying that Gigafactory Mexico is now pushed back to the first quarter of 2025, and this came from China because the Chinese suppliers are being asked by Tesla to go and set up shop in Giga Mexico, and they obviously got some folks kind of communicating with a Chinese-based publication that said that Tesla ended up underestimating the difficulty of building a facility in Mexico. And as per the publication, Tesla has reportedly informed the suppliers that if they fail to complete localized production in Mexico by 2025, They might not only find it difficult to secure orders from the upcoming facility, they may also lose their export deals to Tesla's American factories. So Tesla's really encouraging them to set up shop in Mexico, and it might have had to push back because of supplier deals. Citing a supplier from Tesla, the publication noted that Tesla's will adopt a purchase price in Mexico that's 18 to 20% higher than its orders in China. They'll pay them more, set up shop in Mexico. The supplier estimated that building a factory in Mexico would increase gross margins by around 3%. So they're being encouraged, incented to do that. It's going to take some time. And so, yeah, it's been delayed.
Yeah, I don't. Okay, there's nuggets from that article that, by the way, I've been on the inside of an operation and I've seen these articles written about like the company and the work that I'm doing. And sometimes there's nuggets of truth in them, but they're mostly about 70 or 80% just way off. So, so first off, that supplier that's quoted, they may be a second wave supplier. They may not be a first wave supplier for that setup. So we don't know that. The other thing is Tesla, they are the head of that operation. They could literally issue an edict saying, "Look, we're pulling it back in the 2024. You're there, you're square." And so I don't read too much into this. There's noise. I think you're right on that. When you see noise like this, there could be shreds of truth to it. But let's see what Tesla says about it, if they comment on the earnings call, or if there's a way to ask a question where they can speak to that. I think that would be helpful. But when I see notices like that, I see the 3% margin, I see the 18 to 20%. There's no way that there's no uniform allowance for things like that. That's supplier by supplier, that's deal by deal. And I guarantee you that Tesla's going to be looking to drive much lower cost structure, and not the whole supply base is not coming from China either. There'll be U.S. suppliers, there'll be suppliers abroad that'll be encouraged to set up in Mexico. So I'm not surprised to see the leak. There could be some shreds of truth, but that plan could change between now and then, and I'd love to hear directly from Tesla on it.
Exactly. So we've not heard from Tesla. This is just rumors. And also, we had just heard from the governor of Nuevo Leon saying that the groundbreaking is delayed by 12 to 14 weeks. But that doesn't mean that, we don't know yet if this was delayed. Anyways, it's another one of those things that we don't know yet. We'll probably hear about it in earnings call or sometime in the future. So keep an eye on that, because it's very important for us. We need to see that moving fast. Faster the better. Okay. So another good news, of course, is the North American charging standard by Tesla. As we know, everybody's now starting to announce that they're going to adopt it. But now we're seeing states themselves mandating that anybody who's creating a charging network in that state must adopt the Tesla standard. So this is Kentucky is the first to actually, I don't know where they're at right now, but it sounds like that they're more than just announcing it. They're actually seems to be gaining more traction. They recently implemented a policy that mandates that EV charging companies must include an NACS plug if they wish to participate in a state program aimed at that. And we've already previously heard that Washington State and Texas, they had previously announced, but they, I guess, are not as fast as Kentucky. It's going to be the first state to require this. So they're moving faster. So it's pretty well a done deal. You got all these states announcing this already. And so, at that point, it's like, nail in the coffin. Everybody must move over. Feels great to have one standard and all that. And then
it's a lower cost standard too. It's good. I like the fact that it's simplified and lower cost.
Right. Okay. And then the next one is so Volkswagen is slashing electric vehicle production. Now, I don't know. You probably, surprisingly, you sent me this, because I would assume your answer is, yeah, this is laying off 300 staff. Who knows? This could be anything. But they're pausing work at one major factory, Volkswagen. Yeah.
Yeah. I mean, we don't know. I mean, we ultimately don't know exactly what's happening, but we know the ID4 isn't doing, that great in North America. We'll see the numbers here very soon. But I think they're struggling again with software localization and just capability. And so if these quotes on the record are true, that they're kind of wavering on, are they all in EV or not? I think that would be interesting, because these legacy businesses have to manage, the more that EV accelerates, the greater the deceleration they'll have in their ICE business, where they actually have margins and they have the ability to compete. So I think they're all kind of struggling, and they're all kind of at this precipice of greater capital investment in EV, or can I ride out a little bit longer in ICE and delay this? So that's why I just found it interesting. The 300, you may not
Yeah.
be as meaningful here or there, but it's more of, if there's real struggle occurring, there's real, are there issues with just the sales of this vehicle that they've kind of put, that's kind of their made model.
Yeah. I
That'll be
made a
interesting to
mistake. Yeah.
see.
It's a real deal because he was actually quoted, this man, Fred, which is from Volkswagen. We are experiencing strong customer reluctance in the electric vehicle sector. That's what he blamed it on. Nobody wants EVs, when in fact, so their demand for the electric vehicles is running 30% below their forecast. And so, yeah, they blame lower subsidies, but in fact, it's just most likely their cars, like you
Yeah,
said.
just
So
minus
that's why
minus the number one selling vehicle in the world. No one wants EVs.
exactly. So another one that was good news was Rivian says that it delivered 12,640 EVs in Q2, produced 13,992. Wall Street had only been expecting deliveries of 11,000, so they beat their mark there. So this is the press release that came out, or the news article about it, and so Rivian shares jumped 14%. Yeah, thoughts on Rivian?
The key is, can they reach escape velocity? It's not going to be with these product lines. It's going to be with the next one, where they take the cost structure down. So they're popular. I mean, they're doing a good job with kind of setting expectations and beating them. So the question for them is can they kind of reach that escape velocity? Can they get their cost structure down and achieve that? So that'll be the key thing for them. But they're making an exciting product, and this is an example of a startup. Instead of having all that legacy baggage, they could start up a little bit cleaner. But they've also been doing a lot of OpEx cost reduction as well along the way. So I think the interesting thing will be for them is, like, where are they at from a gross margin perspective? Where are they at from a cash and a burn rate perspective when they report?
I think I've reported this before. I don't know if I had this discussion with you, Jeff, but did you remember or know this fact that in China, the legacy auto manufacturers found it difficult to sell electric vehicles using the existing popular brand, because they were trying to reposition the electric vehicles as it's a totally different car, right? It's got software driven, it's got all the benefits of a battery, and it held them back. And so what they needed to do was spin off, electric only brands. And so that surprised me, because, like I said, like you just said, these EV only companies are the ones that are more likely to succeed than the legacy. Do you have any comment on that, or think, any way to
Yeah,
evaluate this?
Others have talked about it too. I think it's real, um, and creating that sub brand and having it be effective. I think there's others in the Tesla community that would be better apt to speak to it than myself. But I think the marketing and branding aspect of it is a real issue, and until, I think that's one of the reasons kind of Ford has broken out into this whole new business unit and whole new kind of branding of cars, which I think they're going to really accentuate when they get beyond the Mustang and they get beyond this F-150. When they get to their, I think, 2025 product line, you're going to really see them kind of distinguishing or separating the brand, where it's still a Ford, but there's more definitive EV definition of their brand when they're shipping products. So yeah, I think it's called brand taint, and Chevy had that a little bit as well with the Bolt and other products. So that'll be an interesting thing for them to see how they manage it. And they spend a lot of money on marketing. They spend a lot of money on advertising. So they should be able to recraft that story if they've got the cash flow and margins available at that time when they're actually ready with product.
Okay, wonderful. Last bit of news was Tesla announced that they're no longer just offering the white Tesla as part of the standard, including standard. It's now the midnight silver metallic. Thank goodness. There's way too many white out there. Color, which I have one. It's frustrating. Everybody's getting it because it's a default color. Now it's a midnight silver, which is beautiful. And then I just wanted to point out that my friend Nick has this website, Tesla Nick, and click on it and then use that link if you want to purchase a Tesla and get an additional $1,000 off. It's like a referral program. Use it with Nick, teslanick.com. Okay, thank you very much, Jeff. Appreciate you. That was fantastic. That was loaded with information. It's a holiday. Thank you for joining me on the holiday. That was
Happy
wonderful.
4th.
Happy 4th and happy Tesla. Thanks, everybody.